right. Greed works.
Hello everyone and welcome to episode 50 of Let's Play Wall Street Raider. I'm RakeM, your host. Last time out, STI started at $65 a share and made it all the way up to 107 and change. And we turned a $40 trillion profit on put options, plus another $3 trillion on index futures. And our net worth climbed to $660 trillion. That's the highest we've ever been, and I don't think it's going to stay there. Our net worth is going to go up and down and up and down, but we will eventually get to $1 quadrillion, I promise you. But we have a situation coming up regarding SunTrust that's going to force its stock price down. But we'll take advantage of it the way we always have by selling call options on the bank. And so whatever we lose in net worth from its drop in stock price, we'll make some of it back on those call options. We'll also sell the stock index short and make some money on its decline. Okay, so today, what we're going to do, the interest rate is going down. We still have an easing policy. It's all the way down to 7%. And as a result, the stock price of the bank and the index should both continue to rise. Now, if that's the case, why did I sell off the futures and the put options last episode? Well, I hit my target. And I don't know when the bottom is going to drop out of this. And the reason why the bottom is going to drop out is because I have call options on the bank that expire in January. Right now, this one, 2202, is the strike price, and this $14 trillion is going to be at the expense of the bank. Okay, that's basically equivalent to an entire year's worth of income for the bank. So I'm going to be forced to sell this one or to exercise it, one of the two, and it's going to be at the bank's expense, and as a result, his stock price is going to drop. I have no idea when the game will take that into account. It may not take it into account until January 4th, when his next projection comes out. But in the month of December, the bank usually has a dip in its stock price anyway. So this could drop at any time. We're already at November 5th, and I just don't know when this stock price is going to go down. But as soon as it starts to show signs of going down, that's when we want to sell the call options, sell short the stock index, and exercise those calls. Okay, now I actually need to back up. I don't necessarily want to exercise the calls. I did a little calculation over here. Okay, let me bring up the other deal. Okay, so here's the stock options. Okay, so this information on here I have just copied onto my spreadsheet. I wanted to figure out, for the purposes of profitability on the on selling call options and on selling short the index, which way is it going to cost them the most money to STI? So if I sell the call options, how much is it going to cost the bank? And if I exercise the call options, how much is it going to cost the bank? So I plugged my numbers in here. This is the current stock price. This is the strike price for the call options and the expiration date, the percent of stock that it represents, the market price of the call, which is basically just the difference between these two numbers, plus whatever premium the option has. Just like other options, doesn't reach its actual value until the day that it expires. Okay, so this is the value, okay, in millions. And then if I just sell these call options, this is the amount that I'll receive, and then I'll have to pay 35% tax on it, because that's the individual income tax rate. So this is the amount of tax that I'll owe and my net profit. Okay, but if I exercise the options, so first I would have to sell the stock, 3% for each one, and this is what I would collect selling the stock. The taxes payable and the capital gains tax rate is 22%. So my net profit is shown here, $56 trillion. Now if I stop there, I'll have 12% less. So instead of 96% of the bank, I'll only own 84%. Okay, so then I would have to exercise these calls to get that 12% back. And so the cost to me would be 13 trillion for a net profit of 43. Okay. Now, the cost to STI is the larger portion, this portion. So I pay the 2202 and he pays the difference. So this is the cost to STI for me exercising those calls. Okay, so here it cost STI 58 trillion, and here it cost him 57.6 trillion. But this number isn't exactly accurate. It's actually going to be lower than this, because when I sell the bank, you and I both know that when you sell a stock, the stock price drops. Okay, now it may not drop much, may only drop $1 or $2, but for the size of the bank, I mean, he's got 5 trillion shares of stock. It's 5,499,600,000,000.78 shares of stock. So even $1 equals 5 trillion bucks. So this number is going to be lower, and it's already lower, but it's going to be even lower than what's shown here. So the way that I'm going to go is I'm going to just sell the options off, because that costs the bank the most money, and we'll have the larger dip. We'll have a larger dip in his stock price as a result, or at least that's what I'm hoping for. All right, so that's the way we're going to go with it. Okay, so since we're sort of in a waiting pattern on him, for him to reach his peak, what we're going to do in the meantime is I have updated my spreadsheet, and I've changed the color coding a little bit, and let me tell you what it is. Basically, the ones that are highlighted in black have a 90% market share or better. The ones in gray have 50% to 90%. The ones in pink have 20 to 50, and the ones in green have less than 20. Okay, and this time I went ahead and highlighted all the stocks that have reached their target price. There's 39 stocks altogether that have reached their target price out of the 57 or so that we own. And that doesn't include the insurance companies. Okay, but we're not going to sell these. We are going to hang on to them, and I'll show you why. We have been selling calls and puts. The game has automatically been assigning a counterparty, and basically every counterparty that the game has selected has ended up in bankruptcy. So if we sell these companies off and then do more options, every single one of them will go bankrupt. Unless we happen to not turn a profit on an option, but that hasn't happened yet. So, in order to protect the size of the market, like right now, there's 15 trillion assets in the market. Okay, and we own 9 trillion. So, in order to protect those assets and keep them from disappearing from the game, we're going to keep growing these. We're going to keep growing them up. And we're not going to sell them unless the return is so good that we can sell the company off and then buy new assets equivalent to what we just sold. So if I can sell Nestle and then have another company enter the industry and give him an additional $55 billion in assets and have that be profitable, then we can sell the company. And I've highlighted several here. These ones in orange. The industry has an average return of over 40%. So it might be possible on these that are orange to do that. Okay, these that are in purple, have a 38 or 39% average return. So it might also be possible to do those. And every single one of these that has a highlight in this column, they're all yellow. But we're not going to try to sell any of these today. We're going to probably do an experiment with one of these at some point and see just how well it works out. But otherwise, the only time we're going to sell is if one of these gets sued for antitrust and has such a market share like, let's say, what's the one? Venfin. Where's Venfin? Here, right here. So he's got 53.4%, but his industry only has 2 companies in it, and the other one is about to go bankrupt because he was selected as a counterparty on one of the put options. So Venfin is about to become the only company in this industry, and we're going to buy another 60 billion worth of assets to replace his when they disappear. Okay, so if another company enters the industry and then sues Venfin, who now has or would then have a 100% market share, we would look to sell him off and then re-enter the industry and buy new assets. Okay, but otherwise we're going to hang on to them and just keep growing them up. These stocks represent the backbone of the entire income structure for STI, and without it, his earnings would crumble. So we have to protect these assets. We can't let them evaporate and disappear from the game. We need this number, this 15 billion, we need that to grow, not shrink. All right, so in the meantime, while we're waiting for STI's stock price to peak, we're going to work our stocks and our commodities. So I've gone through the game. This is all up to date, and I have put notes on every stock that needs something done. And we're just going to hit them one by one. We're going to start with the most expensive ones, the largest market cap, and work our way down. I don't expect we'll get to the bottom of the list before STI peaks, but this is just kind of busy work and clean up until we can sell some call options on STI. All right, so once STI peaks and we sell our call options and sell short the index, sell off our call options, his earnings, basically his income base is still going to be increasing. So this dip that he's going to take as a result of us selling those call options, it's going to be short term. And I'm not exactly sure how short term, could be till April or thereabouts, but he should recover. Now, I don't expect him to get all the way back up to 107 again unless the prime rate goes all the way down to 4%. Okay, so we're going to be playing a little bit of a guessing game when it comes to when to cover those call options. But right now he's selling at a $40 premium, and when we sell those call options, we're going to try to make it basically at whatever his net worth is at the time. So if he's worth $80 a share, then that's what we'll make it. If it's worth $70 a share, that's what we'll try to make it. But basically, we just want to put it to where we're going to forget the premium and just use the net worth as the basis for those call options. Okay, so that's the plan, and let's get started. All right, so starting with Sigma, wheat is all the way up to $4. And I want to get rid of all of our wheat. Wheat has not been moving much at all, so I just want to free up all of those slots to do something else that has more volatility. Before I get to that, though, I want to have Novarco, National Oil Well, sell short oil. Okay, so I'm going to have him sell short oil, and I will be right back. Okay, now I want to cover or sell off all of our wheat futures. I think I have wheat, and Sigma Aldrich has wheat, and so does Archer Daniels. And I'll have to look at the who owns what list to know who else does, because I think Berkshire might, but I've got to go look it up. But anyway, I'm going to have everybody that I control sell off their wheat futures, and I'll do that and fast forward, and I'll be right back. Okay, that's all the wheat futures. Now, corn is all the way up to $4.91, so I want to sell those too. So I'm going to get those out of here as well. All right, I'll fast forward while I'm selling those off, and I'll be right back. All right, so all we have now commodity-wise is silver, gold, crude, and when the time comes, we'll add the stock index to our portfolio. And before we move on from commodities, I want to have Sigma Aldrich sell short the spot crude if he hasn't already. And he hasn't, so let's have him sell short futures of crude. I'll do that and I'll be right back. Okay, that's done. All right, next up, once upon a time, we were buying in stocks, 19% of each stock, either as a protection against antitrust or in a part of a strategy to take over control of an industry. But this strategy is no longer needed. We're reclaiming the money that we lose in antitrusts via call options and put options and commodities trades. So I'm going to sell off every company that has a bunch of 19% stakes in different companies in their same industry and have them sell those off. So because Mobile went broke and we lost money, and UCL went broke and we lost money, and these guys are going to go broke and I don't want to lose the money. So we're going to sell these off and we'll get the money back via other channels. Okay, this also affects Goodrich. And Telefonica was the other one, and it looks like I wasn't fast enough. Alright, so AT&T went broke here. And these other guys are about to go broke too. So I want to add more assets to replace what this industry just lost. So we have 923 billion. And when we started this game, there was 1.6 trillion in the industry. So I want to buy another 300 billion minimum. Let's take a look and see what our return is. Pretty low. Pretty low, but this guy still has 20%, so we'll wait for him to go broke. I think that's it as far as subsidiary companies' stock ownership goes. So let's go back to Berkshire. He's moved up to 110 and is kind of holding steady, so we're going to keep a close eye on that, given what the calendar, what date on the calendar it is. All right, so here, the industry is growing huge and we are not. And we've got a good return. So I want to increase this to 20%. There goes Nippon. So let's go back to Telefonica and see what our return is now. 20%. And we need to give him a dividend. We're bringing in $1.18. We're worth 27. Let's pay out $1.18. Lowe's just went broke. So let's go over to Venfin. Procter & Gamble that we looked at earlier just went bankrupt. Alright, so here's Venfin, all by his lonesome. And the return's way too high, so let's buy some more assets here. Let's buy 30 billion. That still won't make up for the 60 billion that Lowe's Corp had. But any more and we will risk our return. Let's give him a dividend too. We're bringing in 365, so let's make that the dividend. Believe it or not, I have the ticker paused. Okay, Boise Cascade's up. We'll get to him eventually. Alright, so Berkshire, we increased the growth rate. That's what my note was. The S was to sell the subsidiaries, and we gave them a dividend. Priceline, there was nothing to do. We looked at them last episode and we had everything done. Alright, so Goodrich, we also needed to give him a dividend. Alright, so we already have 0.5%. Bringing in 36, but we're worth... Well, let's see. Oh, we got a lot of cash. We need to pay some of that out. So let's double this. Make it 60 cents. $111. We might break 700. And our interest rate's down and our policy is still easing. I think we'll have to establish a hard stop at like if he hits 120, we'll go ahead and do it then. Otherwise, we'll stop at December 15th. That sounds good. December 15th or 120, whichever comes first. Alright, let's go to Intuit. Now my notes on him were increase the dividend, and modify the R&D. So we're very capable. And let's see, we're bringing in 41 cents. R&D is fine for very capable. We're going at 8, so let's just increase the dividend. We're bringing in 41 cents and we're paying out 29, so let's make that 41. Next, Nico. And the SI just means we need to remember to do stock index futures when it's time. We need for him to be a participant in that operation. I'm going to leave that note on him. All right, freebies. My note on him is to increase the dividend. We only got a 0.8% dividend. We're bringing in 62 cents. And our dividend is, well, it's not out of line. We could make it a little higher though, since we have so much cash. Let's make it 80 cents. Dell is next. My note on him here is to add assets. We can lower the R&D to 10% probably. We need to give him a dividend. And we can buy these two companies and merge them in. Yeah, so 10% here. We'll buy those two companies and we'll give them a dividend. All right, so let's see. Sun Microsystems. And the other one, Fujitsu. All right, let's pay off the debt. We're down to mediocre now, so 12% we'll leave it instead of making it 10. We're bringing in 28 cents, so let's give him that as a dividend. He's done. Panasonic. Let's see, what is my note on him? R&D needs adjustment. We're reasonably competent. Bringing in 36 cents. So we need to increase this to 8%. And the dividend's actually fine. And we can grow more than that. Let's grow at 10%. Change this to 8. Nico's earnings are down. We'll get to him, he's on the list. Okay, that's Panasonic out of the way. Alright, he's dropped to 109. So I think it's time to do our call options and sell the index short. So I'm going to start with Nico. Have him sell the index short, and then I'll do all the insurance companies. And then if they're still offering counterparties are still offering contracts above 10, I'll do some for me too. All right, so I'm going to get this done, and I will be right back. Okay, so it was really bad. Pretty much right away got down into the single digits, and it's so bad. I'm only going to have Nico do it. There's no point in having anybody else do it. The number of contracts is just so low. So the next thing is to have Berkshire Hathaway sell calls on STI. I don't know if he'll be limited to 1% anymore or not, but we'll have him do the maximum that he can, and then I will do the rest. So I'll fast forward while I do that, and I'll be right back. All right, I guess selling calls only works if you own the stock that you're selling the call on. So Berkshire wasn't able to do any. I had to do them all. And here they are. Okay, so I got a total of 175 trillion out of those. And they're already down 6 trillion. So what we're going to do now is we're going to sell these top three. And then in January, when I get this one, I will sell that one off also. So let's go to sell call options on STI and answer yes this time. This one's worth 14 trillion. So let's sell that one. Okay, proceeds will be 14 trillion. You are selling employee stock options back to the employer. The amount paid to you by the company will be an expense for it. Yes. Okay, and let's sell off those other ones too. Okay, this one's worth more, so we'll sell it. There we go. So we cost him a total of, let's see, 26 plus 14, that's $40 trillion in expenses. He's already down to 96. And here's his projection, negative $4.93. Way down from his earnings of last year and every other year. He's only been making 60 cents, neighborhood of 60 cents, and it's been going down until last year because the interest rate finally went down. But he's going to lose money this year. Let's see, it doesn't say expense, I guess it'll be on here. He has incurred expenses of, it doesn't say yet. I guess it'll say after. So he's got plenty of cash because I have 233 trillion in my account. So now we just have to wait for him to go down. Now, this dip is only temporary. He's currently trading, his value is at 66. My options are all at 80, I think, or 82, I forget. So we're just looking for him to go down to his net worth, down to $65 a share. And that's when we'll cover them. Okay, because he's only going to take a temporary dip. On January 15th or whatever, if we have to sell that other option off, we will. But as soon as he hits 65, we're going to cover those and probably sell the index or cover the index by Nico. and then we'll start buying again. Okay, so we're going to go back to working our stocks because we need their income to be strong so that his stock price goes right back up again. All right, so where did we leave off? Novartis. And my note on him is market or management settings. So let's go to Novartis. When we get down to the bottom of the list, then we'll start working our bankruptcies. All right, so we're growing huge, and we have too high an R&D. We're very capable, so let's knock that down to 6%. Let's change our growth to 10% because that's what the industry's growing at. And let's see, what do we need to make our dividend? We're bringing in 39. So let's make that 39 cents. All of our stock earnings are up. It's the ones that I've seen. All right, Daewoo Motors is, needs an adjustment on his R&D. Okay, spending 16%, and he's very capable. Let's change that to 6%. Our dividend was kind of low. He's up. Sigma is down, but we don't really care about him. He doesn't have assets. Okay, we're bringing in 31. We're paying out 11, so let's change that to 31. We're growing at a negative. We don't need to grow that negative. Look at our return. Let's change this. Let's see. Let's change this to 5% positive. And let's buy some assets too. Let's buy 24 billion. All right, Berkshire has another antitrust, this time from Exxon, and it's only 1.6 billion. All right, let's see what our return is now. 36, that's good. Warner Brothers, add assets and increase growth is my note on him. Earnings are kind of flattening out. Okay, we got a 70% market share and everybody's dying. Everybody's dying, so we need to grow. We need to replace those assets. We have, let's buy 36 billion. Okay, and we can buy assets from Netflix. Entertainment and broadcasting, he's not there. You're lying to me. Okay, 36 billion. Matsu's up. All right, still at 43%. Let's increase our growth to 8%. And we're reasonably competent, so let's increase our R&D to 8%. Okay, on our dividend, we're bringing in 51 and we're paying out 22, so let's change that to 51. Okay, he's down to 88. All right, Southern California Ed, add assets is my note. A lot of bankruptcies. So let's change this growth rate to 5%. let's add 10 billion. Okay, that's fine. When these goes broke, it'll go up a little bit. All right, United Health, my note on him is to increase the dividend. We're paying out 4 cents and we're bringing in 21. Returns here are pretty high too. Let's add some assets if we can afford. Let's buy this one. Pay off the loan. Okay, that looks good. All right, ST, add assets is the note. Okay, we have a 75.6% market share. What did we have at the beginning of this? 71. So somebody's gone bankrupt. And 4 more are going bankrupt. And our returns skyrocketed. So let's increase our growth to 7%. And let's buy 30 billion. And let's increase our dividend a little bit too. Bringing in 61, so let's change it to that. Okay, are we still very capable? Yep. Okay, that's good. A lot left to go. Okay, so CM. I have to look at Mitsubishi. Is that what it is? Oh, Matsushita. So CM. What does that mean? I don't remember. Oh. Wow. Change management, probably. Shanghai's up. Yeah, grossly incompetent. All right, let's change the managers. Got 28. GE's going broke. I wonder if he might have assets for sale. Workdale's up. What it would cost to buy him. Of course, if he was a counterparty on one of the oh no, he's not a counterparty. 92 billion to get all of this. What does he have in stock? Leonard, which we don't want because he's being sued, and Sumitomo Rubber. So if we tried to buy him, it wouldn't let us because we've got Taiwan Rubber. Like to have buy somebody that can help us increase our management rating, but there's nobody to buy really. How much is he worth? 182 billion and net worth of 13. That's crazy. That is nuts. Okay. Guess we'll just have to hope that the changing of managers will work. All right, Amway, add assets, change the R&D and CC. I don't remember what CC means. Let's go to Amway. Wow. Everybody's going broke. All right, we had 36.5 and now we have 88.8. So we need to buy some assets here. I don't know what CC meant though. I cannot remember what CC means. Alright, so this industry had 213 billion in it, and now it has 78131 divided by 0.888. So it's down over 100 billion. So let's give him 80 billion and have him buy, well, not 80 billion. Let's give him 60 billion. Alright, so we can buy 71 billion. So let's buy half that much. Let's make it 36. And let's see what that does to our return. Down to 16. But when these two go broke, well, they're small. They're all small. They go up a little bit, but not a lot. So 1%'s fine. Alright, so what else did I have here? Add assets and R&D. So we're reasonably confident in spending 8%, so that's fine. Let's check on our dividend. 18 cents, and we're bringing in $1.31. So let's change that. Okay, SunTrust. Wow, he fell to 88, and now he's back up to 90. His projection has been modified. Still doesn't say what his loss was. You know what else we don't need to do? We don't need to freeze anybody. For the same reason that we sold off those 19% interest, we don't need to have anybody frozen. We don't need to control credit anymore. Okay, I'm going to unfreeze everybody that we have frozen. I'll fast forward while I do that, and I will be right back. Okay, SunTrust is down to 82.31. Curious to see. Okay, so his net value is about the same, 66. So even though the interest rate is still going down, he is going to sustain a major loss. So I'm going to leave this as cash, just so he's not making any extra income off any loans, at least until he bottoms out. Then when Then when he bottoms out, I'll reinvest my cash the same way that I did with Fortis. Except I'll probably give it to a bank so that I can liquidate the bank into SunTrust. But anyway, I noticed that gold has been going down. So I think I want to cover my positions in it and sell off my physical gold as well. So I'm going to do that real quick and I'll be right back. All of our other commodities look fine. Silver's on the way up, crude's on the way down, and we shorted it, so that's good. And the index is down. So we just need to give this some more time, and if it doesn't go down on the 4th when it declares its earnings and its big loss, we'll sell off that other set of call options. Still doesn't have a line on here about the losses. No tax loss carryovers either, at least not yet. So we'll see what it says on the 4th of January. It's coming up. All right, let's go back to our list. So we got down to Amway. Did we finish what we were doing here? I still don't know what CC meant. Probably lower the dividend. He's bringing in $1. Well, that's what he's bringing in though. Let's see. We've got 92.3, and we did have 88.8. We bought more assets, right? All right, let's let that ride for now. And we'll figure out what to do with it the next go around. So the R&D, we're reasonably confident in spending 8%, so that's fine. Nobody else is spending more, so we're good. All right, I'm going to call him done, and if I figure out what CC meant, I'll let you know. And he doesn't have any futures. He doesn't have any options. What else would CC mean? Extraordinary dividend, maybe? I just don't know. We just have to remain a mystery because I don't know what it is. Alright, so Shenzhen. Note on him is to add assets and increase the dividend. Alright, so we're making no bucks here, so let's add to our market share. Increase our growth rate to, since these are negative, let's make it 6%. And we could buy this one. So let's do that. Let's see. Yeah, let's do that. Now let's add some more assets. Let's add another 5 billion. Okay, we'll buy some from Dow then. That's quite a lot. Let's buy half of that. All right, now let's increase our growth rate. And we're bringing in, Hyundai wants to reissue bonds. That's fine. We're bringing in 52 cents, so let's make that our dividend. Okay, I don't know why it's showing me that. Do we own Deutsche? Yes, we do. It's showing me this. done. Let's go over to... Thought we sold those off. Let's go to Centercore. Alright, so he still had some stock. I thought we took care of these, but I guess not. Alright, so we'll have Delta buy these assets. Alright, that's all he owned. He's on our list. We're going to come to him. We need to increase his dividend too and grow more. Nestle. Reasonably competent, spending 9%. Plenty of cash. And the returns here are above 40%, and we got people going broke, including one that has 16%. Alright, so he's got 26 billion. Let's add some assets here. Let's buy 12 billion. Okay, and let's increase our growth rate to 10 and increase our dividend to 55 cents. Okay, we are still, or what are we rated at now? Mediocre. So let's increase our R&D to 12. Dr. Pepper. Add assets and adjust the R&D. Wow. Well, I don't want to add assets. Our return's not high enough. We can increase our growth rate though. And our dividend's fine too. Okay, so we're mediocre. Alright, let's increase our R&D to 10. And let's make our growth rate 6. And we've got a lot of cash. So let's increase our dividend. And now it's at 72. Let's make it $1.60. WestMed. Reasonably competent and spending 16%. If we can back that off, make it 12. And these two are growing negative, so we can increase our growth rate too. So 8%. And let's make this 12%. And I guess that's it. Probably add some assets. Let's add 8 billion. All right, and we're bringing in 20 cents. And we're paying out 16, so let's change that to 20. That looks good. $80.64, he's still coming down. All right, Delta Airlines. My note on him is to increase growth and update the R&D. Where are we? Here we are. Wow, 21%. Jesus. Oh, okay, so we can bring it down to 16. Increase our dividend, but I don't think I want to do anything else. Okay, so we're bringing in 34 cents and we're paying out 10, so let's make it 34. All right, Nissan America. Reasonably competent, spending 8%. Industry is improving. And here, big ones are going broke. And we have a fabulous return already. But those are a lot of assets that are about to disappear. So I think what I want to do is have Hartford give him some money. Let's see, he has assets of 53, so we want to buy probably another 30 billion. So let's have Hartford give him 30 billion. Right, and let's buy some new assets. Okay, now when these guys go broke, our return will shoot through the roof. Let's increase our R&D to 12. Bringing in 65, so let's set that for our dividend. Garden. We've got a few small ones going broke here, but nothing major. We have a fabulous return and we're only growing at 6%. We are reasonably competent, so let's change our R&D to 8%. Let's grow at 10. Grow at 10. And then let's buy 9 billion. We're bringing in 76 and we're paying out 90. All right, that's all right. All right, Zenfin. No, we already looked at him, but I don't remember if we did anything with him. He's got 14 billion cash, 100% market share. So let's see what the return is. 30%. Okay, we need to change the growth rate. So let's change the growth rate to 1%. That's the long term. Okay, we'll spend 8% on the R&D. That's fine. Actually, we can bring that down since nobody else is in here. All right, so 6% here, 1% growth, and we're bringing in 447. Wow. Let's change our dividend to 447. Let's make it 450 to be a round number. And we do not want to add assets. The return's just a little too low for that. All right, Scripps is up next. We're still at 80. Every time we do something, I'm checking that number. Silver's still going up. Index is holding steady at 29. Spot crude still heading down. Wow, corn's at $1.38. Let's have Archer Daniels snap up some corn. Let's have Nestle buy corn as well. He's in packaged foods, and that'll be treated like operating income. All right, I'll be right back. Alright, the price rose to $2.55, so I'm going to stop there. SunTrust has dropped to 81 and change. Curious to see what my call options are worth. Wow, I've already gained 90 trillion on them. So, SunTrust is still worth $67 a share, and now he's down to 80. So that should continue to fall. He's projected to lose 507. Still no mention of the losses, but that'll come up. So it's January 1st, and I was going to go ahead and play through to January 4th, but we probably have a lot of stuff to do on the 4th, so I'm going to end the episode here. And when we come back in episode 51, we'll see what happens to the stock price. If it doesn't go down enough, then I will sell off this set of options in the middle of January, and hopefully that'll drive him the rest of the way down to where we can cover our calls. All right, but thank you for joining me. I hope you enjoyed the episode. If you did, please like and share. And until next time, this is RakeM saying, have a good one.